This is a demonstration of problem 852, identifying and analyzing financial statement effects of stock transactions. The stockholders' equity section of Express Media Company for the current year follows, and the problem has given us information on our preferred and common stock par values, additional paid-in capital, and retained earnings. I have set up T accounts for each one of the stockholders' equity accounts and included their beginning balances. We will be making transactions in the financial statement effects template, and these T accounts will be updating with the amounts as we record the transactions. On January 10th, we issued 28,000 shares of common stock for $18 cash per share. So we need to determine the proceeds from the sale of the 28,000 shares at $18 per share, and that is $504,000. Next, we need to determine the par value for 28,000 shares at $10 per share as given in the problem, and that is $280,000. To determine additional paid-in capital, we take the proceeds minus the par value, and we get $224,000 of additional paid-in capital. On our financial statement effects templates, cash would increase by $504,000 and contributed capital would increase by the same amount. When we look at our T accounts, we see that common stock increased by the par value and paid-in capital increased by the $224,000. On January 23rd, we repurchased 8,000 shares of common stock at $20 cash per share. So we need to determine the cost of the repurchase. So 8,000 shares at $20 per share is $160,000. So cash would decrease by $160,000 and contributed capital would decrease by the same amount. When we look at our T accounts, we see that we now have a balance in treasury stock. We did not have any treasury stock at the beginning, and that balance is $160,000. On March 14th, we sold one half of the treasury shares that we acquired on January 23rd, and we received $22 cash per share. We purchased 8,000 shares, so if we sold half of those, that's 4,000, and we multiply that by $22 per share to get the proceeds of 88,000. We need to determine the original cost of the shares, and that was $20 per share. So the original cost was 80,000. To determine the additional paid-in capital, we take the proceeds minus the original cost, and that gives us additional paid-in capital of $8,000. Cash would increase by the proceeds of $88,000, and contributed capital would increase by the same amount. When we look at our T accounts, we see that treasury stock decreased by the original cost of $80,000 and paid-in capital increased by the $8,000 of additional paid-in capital. On July 15th, we issued 2,600 shares of preferred stock for $128,000. So we need to determine what the par value is for the 2,600 shares at $25 per share, and that gives us $65,000 of par value. We subtract that from the proceeds of $128,000 and we get $63,000 of additional paid-in capital preferred. On our financial statement effects templates, cash would increase by the proceeds of $128,000 and contributed capital would increase by the same amount. When we look at our T accounts, we will see that our preferred shares increased by the par value of $65,000 and paid-in capital preferred increased by the $63,000, the difference between the proceeds and the par value. Our last transaction was on November 15th, and we sold 1,000 shares of treasury stock that we acquired on January 23rd, and we sold it for $26 cash per share. So to determine the proceeds, we take 1,000 shares times $26 per share, and that gives us proceeds of $26,000. We need to determine the original cost of the shares at $20 per share, and that was $20,000, so our additional paid-in capital would be the difference between the proceeds when we resold the treasury stock minus the original cost, or $6,000. On the financial statement effects template, cash would increase by $26,000 and contributed capital would increase by the same amount. When we look at our T accounts, we would see that our treasury stock decreased for the original cost and additional paid-in capital treasury stock increased by $6,000. The B part of the problem asks us to prepare the stockholders' equity section of the balance sheet, assuming that the company reports net income of $121,000 for the current year. So we need to increase retained earnings by the net income of $121,000. So to complete the stockholders' equity section, we start out with the par value for the preferred and the common stock from our T accounts for both of those, and we add those two together to get a total par value for both shares of stock. Then we take the balances in our additional paid-in capital accounts for preferred, common, and treasury stock, and we get a total for those. And those balances came from our T accounts. Then we add our par value to our additional paid-in capital, and we get total paid-in capital of $1,741,000, and we add to that our retained earnings of $491,000, and we get a subtotal of $2,232,000, and we have to subtract from that our treasury stock balance, which is $60,000. So our ending stockholders' equity amount is $2,172,000. And that is the conclusion of the demonstration for problem 852.